The theme for this week is that markets are really in a holding pattern. We've seen them rise back to their all-time highs, but they've really sort of drifted sideways, just along that all-time high resistance level since then. A little bit of movement here in Australia, maybe a little bit of movement in the US as well, but overall, nothing really has happened. So hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday the 28th of May, 2024, and before I get started, you do need to be aware that whatever I say is general advice only. So I did want to start with the monetary policy meeting minutes that we saw last week. We saw the RBA, the Reserve Bank of Australia's meeting minutes, and we also saw the Federal Reserve Fed meeting minutes as well. Both of the meeting minutes were from meetings at the start of May, and they did come after some pretty strong inflation data for the first sort of 3 months of the year. We saw stronger than expected US inflation in January, February, March, and as a result, I suspect that the meeting minutes were a bit more hawkish than expected, particularly from the US. In response, markets did generally move a bit lower. We saw a little bit of selling, especially on the futures, after the meeting minutes were announced. That did push things down a bit. The RBA meeting minutes were kind of a bit less relevant. They didn't really have any new information, and again, the RBA seems to be pretty content to hammer the Control-C and Control-V button at the moment, just copy-pasting whatever they've said for the last few meetings. They did retain the tightening bias, and I think our market was perhaps expecting a little bit more dovishness from our RBA meeting minutes. But overall, I would say that the meeting minutes for both the Fed and the RBA were a bit more hawkish than expected. I think it's a bit odd that the market was surprised by that, because we did see the lower US CPI reading, the lower US inflation reading, but that came out after the meeting was held. That came out after the Fed meeting at the start of the month. And so a lot of people who'd assumed this sort of dovish stance really sort of forgot that the economic data came after the meeting. Now, markets were saved somewhat by a much better than expected company earnings report from the US chipmaker Nvidia, and where the US market had closed lower, we then saw US futures push strongly higher, and in fact US futures pushed up to fresh all-time highs based on the strength of the Nvidia company earnings report. That did allow our market to sort of stave off most of the selling when we saw those futures, and the US markets did open at fresh all-time highs. Now they very quickly sold down after that and back to roughly the previous all-time high, and since then they've been really sideways even on the futures. So overall, markets are just a bit uncertain about the timing of rate cuts. I think everyone believes the next move is now lower for interest rates. But just uncertain as to when it's going to occur. I think the consensus is now that September will be the first of the US rate cuts, and that'll lead our Reserve Bank of Australia to cut rates, maybe towards the end of the year, perhaps in December. It will depend on how the data comes out, however, and overall data has continued to come out a bit more inflationary than policymakers have expected, and as a result, that rate cut timetable has kept being pushed out. People seem pretty confident about September now, though, and that continued expectation of rate cuts in 3 or 4 months' time has acted like a bit of a carrot dangling in front of the market, and that has allowed markets to achieve the successive all-time highs that we've seen this year. So for Australia, we've got some pretty important data this week. So today we saw the Australian retail sales for April. They came in lower than expected, and that was after some pretty low numbers in March as well. It came in at 0.1%. I think people were expecting 0.3% growth. So retail sales really starting to slow. It's been a pretty weak year for retail sales in general. Australian consumers definitely tightening up and spending a lot less. With the price rises and stuff, even with the price rises, people have sort of restrained the spending. So it does really point to sort of somewhat deflationary conditions, at least from a consumer's perspective. People are really starting to clamp down on their spending. We will actually see consumer prices. We will see CPI or inflation announced tomorrow. That's going to be at 11:30 Australian Eastern Daylight Savings Time, or sorry, Eastern Standard Time, no longer in Daylight Savings. And that will be probably the biggest data release this month. Overall, the market wants to see inflation continuing to slow. And the retail sales do point to deflationary conditions. People are starting to rein in spending, the economy is starting to slow down, and hopefully that means that we will see prices start to slow tomorrow as well, with the tomorrow's data as well. I will just caveat that by saying that it looks like, at least for the past little while, most inflation hasn't come from reckless consumer spending. Rather, it's come from corporate profiteering, especially in sectors where it's hard for people to sort of change products and change what they use. Things like service provision, financial services, and other things like that. So we will need to keep an eye on that data release, 11:30 a.m. tomorrow. If it comes in lower than expected, expect a bit of a pushback up in our market, probably back towards the all-time highs. And if it comes in stronger than expected, I suspect we'll see pretty strong selling for our market pretty quickly. I think we'll go back towards the early May lows around 75.50. Alright, so that leaves us in a waiting game. Like I said, we've seen markets return to the all-time highs roughly, and since then they've done largely nothing for the past sort of several sessions. We now need to wait to see if markets are going to break higher or lower. And overall, the momentum does remain to the upside, but what I will say is that valuations are extremely stretched. And if we do see any more upwards move, it looks like the upwards movements are becoming incrementally smaller. The steam is definitely running out of the optimism in global markets. Now, it doesn't necessarily mean that things are going to turn around from here, and indeed, the US government is printing more money than they have ever done in history, and that does, seem to be flowing into the stock market. But overall, valuations are pretty ludicrous, especially for our own market up at the current level. And so any incremental sort of upside that we do see is likely to be quite small. So let's have a look at the charts for this week. This is the US S&P 500, and we can see they actually set a fresh all-time high after the Nvidia report, and that was on Thursday there. They set a new all-time high on the open, and then they came back to the previous all-time high at roughly 52.60, which they held as support. Since then, they had the Friday session, which was sideways. They were closed overnight for Memorial Day, but their futures were sideways as well. So overall, their market has largely drifted sideways for the past 2 weeks and pretty much done nothing. Again, like I said, we're waiting to see. We're in the waiting pattern, holding pattern, seeing if they break higher or lower from here. For our own market, we returned to our all-time high at 7,900. We held that as resistance. We drifted sideways, and then we broke the ascending triangle pattern late last week. Since then, we sort of largely drifted sideways as well. For our own market, I'm keeping an eye on this 7,800 level. If we push back above that, I suspect that's a signal we're going back to 7,900. And if we fall back down, I'm looking at 7,700. If we break below 7,700, I suspect that's a move back to 7,550 for us. So I will wrap it up there for this week, guys. We're just in a holding pattern, in a waiting period, waiting for the data, waiting to see which way markets break, whether it's higher or lower. And I will say that even though we're seeing, a trillion US dollar government deficit every 100 days, I do think that any upside is going to be very incremental on previous highs, and there is a lot of room to the downside based on how expensive shares are at these levels. So that's it for this week. Hopefully you enjoyed, and I'll see you guys next time.